Welcome back to the Deep Dive. Today we're going to be looking at computer age management services.
Perhaps.
CAMS, yeah. Their second quarter results for fiscal year 2025. We've got their presentation here, and we've also got a transcript from their earnings call. Going to get into the details about this company and kind of see how they're making their money.
Yeah, and I think what's really interesting about this is that, they're not just a company that's, behind the scenes kind of keeping the wheels turning. They're really at the heart of what's going on in India.
Yeah.
In terms of the investment boom.
Absolutely.
And this quarter's results, are kind of a testament to that.
Yeah, let's jump into those big picture numbers first, right? We see record revenue, record profits. They're also sharing the wealth, I guess you could say, announcing a 25 per share dividend with a special euro 10.50 payout on top of that.
Mm-hmm.
Investors are pretty happy.
They are, and they should be. We're talking about a pretty massive surge in their total revenue, 32.7% year on year.
Wow.
And what's really impressive is that this growth isn't just coming from their traditional mutual fund services. We're seeing it across both their core business and some of these newer areas that they've been venturing into.
Okay, so that's what I wanted to ask you about next.
Yeah.
Most people, when they hear CAMS, they think mutual funds, but it sounds like they're diversifying, branching out a bit. What does that diversification look like?
Yeah, it's a smart strategy, especially in a dynamic market like India. So they're getting into things like alternative investment funds, those AIFs. They cater to a more specialized investor base.
Right.
And then they're making some really big moves in digital payments with their platform, CAMS Pay. And then they're also involved in areas like, KYC registration and insurance repository services.
So really like a whole bunch of different things going on, putting their eggs in many different baskets, as it were.
It's a good way to look at it. Not putting all their eggs in one basket, spreading things around. It makes sense in a rapidly evolving financial landscape like we have.
Yeah, makes a lot of sense. Let's go back to that bread and butter for a second, though, right?
Yeah.
The mutual funds. India's mutual fund industry is really just booming, and CAMS is right there at the forefront of all that, managing a whopping 45 lakh crores in assets.
Mm-hmm.
And for our listeners who aren't familiar, we're talking about trillions with a T here.
Trillions with a T.
That's a crazy number.
Yeah.
How are they capitalizing on this surge in mutual funds, though?
So one of the key areas we see is this focus on equity assets. Their equity assets under management, they grew by an incredible 59.4%.
Wow.
Which is actually higher than the industry average. So that means they're not just, riding the wave.
Yeah.
They're actually gaining market share. And attracting investors at a faster rate than some of their competitors.
So they're outperforming even this incredibly hot market.
They are. And I think a big part of that, is their strong reputation and the relationships that they've built in the industry. They've worked with some of the biggest mutual fund companies for over 20 years.
Yeah.
So, they've really got that trust and credibility.
They're like the elder statesmen of the mutual fund world almost.
In a way, yeah. But it can't all be about legacy, though, right? I mean, they've got to be doing something to stay ahead of the game.
Yeah, they're not just, sitting back and letting their name carry them. I mean, they've got to be innovative. So what are they doing?
So this is where technology comes in.
Okay.
They've developed these sophisticated platforms, mobile applications that, really streamline the entire process for investors, for distributors, asset management companies. So they're really leveraging technology to make things faster, more efficient, and accessible for, everybody involved.
So it's experience and innovation. That's the secret sauce?
I think so.
What about those other ventures that we talked about, though, the stuff outside of the mutual fund world? How are those areas performing?
Yeah, let's talk about CAMS Alternatives, their platform for AIFs.
Yeah.
We're seeing impressive growth there. They've seen a 21% jump in revenue year on year.
Wow.
And they're even expanding their footprint. They're opening a second office in Gift City, which is, a major financial hub in India.
So they're putting their money where their mouth is.
Yeah. And their commitment to technology isn't just limited to mutual funds. They've developed a solution called WealthServe 360.
Okay.
Which is really kind of revolutionizing the AIF industry.
Oh,
It allows for digital onboarding of investors.
Oh, nice.
So it's making the whole process, much smoother and more efficient.
It's streamlining things, making
Yeah.
it easier for everybody.
Exactly.
Very cool. What about CAMSPay, their digital payments platform?
Now that's where things get really exciting. CAMSPay has seen its revenue absolutely skyrocket at a 69% year on year.
That's a huge jump.
It is the increasing popularity of UPI autopay, particularly for SIPs. That's been a major driver of this growth. But what's even more interesting, I think, is they've managed to snag a major client, Life Insurance Corporation of India, LIC.
Oh, wow.
Which is, as you know, a giant in the insurance sector.
Huge.
And this partnership could really open up a massive new market for CamsPay.
That's a big win. So they're not just playing around in the digital payments world. It sounds like they really want to dominate it.
I think that's a fair assessment. They're positioning themselves to be a comprehensive, financial technology solutions provider, and their performance in this quarter shows that they're on the right path.
So we've talked about mutual funds, we've talked about AIFs, we've talked about digital payments. It's clear this is a company that's in growth mode. They're moving and shaking. But to really get into the details here, to really understand how healthy they are financially, we have to put on our financial analyst hats and dig into these financial statements.
Let's do it.
All right, let's get into the numbers. All right, so we're looking at these financial statements here. Kind of a dense document. Where do we even begin with something like this?
Well, I think a good place to start is with their profit and loss statement. Their P&L.
Right.
This basically tells us how much revenue they've generated, what their expenses were, and ultimately, how much profit they made.
So it's kind of like a snapshot of how they did.
Yeah, over a specific period. That's right.
So what jumps out at you from Can's P&L for this, for Q2 of fiscal year 2025?
Well, their total revenue from operations came in at a solid 341.9 crore, which is a significant increase, 34.1% compared to the same period last year.
So the core business is doing well.
It is.
Were they able to keep expenses in check though, even while growing that revenue?
For the most part, yeah.
Okay.
I mean, employee benefit expenses, naturally, those went up 23% as they expand their operations and hire more people.
Got to spend money to make money, as they say.
Exactly. And then, their finance costs were relatively low at 1.8 crore. Depreciation and amortization expenses also kind of in line with expectations at 15.2 crore. There is one line item, though, that saw a pretty big jump. Other expenses.
Okay.
These shot up by 43.4% to 25.3 crore.
What's going on there?
Well, it's kind of a combination of factors. They had some one-time professional charges, things like, setting up a new subsidiary, preparing for, data privacy regulations.
Okay.
But more importantly, they're investing heavily in technology and infrastructure to support their growth ambitions.
Makes sense.
Remember, they're expanding into new areas like digital payments, AIFs.
Right.
Those things require, a lot of upfront investment.
Sure. Yeah. So they're spending money to make money, essentially.
Exactly. And it's clearly paying off because despite this increase in expenses, their profit before tax, soared by 40.6% to 153.3 crore.
Wow. That's pretty impressive. They're able to grow revenue, invest in the future, and still, maintain that strong profitability.
Yeah. And their profit after tax, which is, at the end of the day, what really matters, came in at a remarkable 114.7 crore.
So the P&L is looking pretty healthy.
Yeah.
What about the balance sheet? What does that tell us?
Yeah, so the balance sheet as of September 30th, 2024 shows total assets of 869.1 crore.
Yeah.
A large chunk of those assets, about 620.7 crore, they're categorized as other assets, which mainly consists of, investments in mutual funds, government bonds.
They're putting their money where their mouth is.
Yeah, they're parking their excess cash in relatively safe and liquid investments.
Smart move.
On the liability side, their total liabilities stand at 136.3 crore. The biggest part of that is other liabilities at 115.4 crore.
Other liabilities. What exactly falls under that?
Yeah, so these are mostly funds that are held in trust for clients. Okay.
Money collected for things like electronic clearing services, the national pension system, stamp duty. It's important to note that these aren't debts, but rather funds that are being held for specific purposes.
So their actual debt is much lower than that number would initially suggest.
Yeah, and that's a positive sign. They're their total liabilities are significantly lower than their total assets,
Right.
which, generally indicates a strong financial position.
Okay, so balance sheet's looking pretty solid as well. What about their cash flow statement? What can we learn from that?
Yeah, so the cash flow statement is where we see, how much cash they're actually generating from their operations
Right.
and how they're using that cash.
Right.
And the news here is good as well. They reported a net cash inflow from operating activities of 152.4 crore for the quarter.
So their core business is making money. They're bringing in the cash. It's throwing off a lot of cash.
Which is great.
Yeah, it means they've got that that financial flexibility to invest in new ventures, to pay dividends, maybe even buy back shares.
Yeah. So what about their investing activities? Were they actually, using this cash to invest in these growth initiatives?
They were. They had a net cash outflow of 14.6 crore from investing activities, primarily due to investments in mutual funds and fixed deposits.
Okay, so they're taking that cash and putting it to work.
They are.
What about financing activities? Did they take on any new debt or pay out dividends?
Yeah, so their financing activities mainly consisted of dividend payments, leading to a net cash outflow of 132.3 crore.
Okay, so they're making sure to keep their investors happy. So we've got through the P&L, the balance sheet, the cash flow statement.
Mm-hmm.
Is there anything else we can look at to kind of get a more complete picture of their financial health?
Yeah, definitely. We can look at some financial ratios, which can give us some more, more granular insight into their performance.
Okay, yeah. What are some of the key ratios that you like to look at?
Well, their return on equity, their ROE for Q2 was an impressive 68.69%.
Wow, that's high.
It's high, yeah. It means they're generating some really exceptional returns for their shareholders, which makes them a pretty attractive investment proposition.
Yeah.
Their return on capital employed, their ROCE, was also very strong at 82.66%.
Okay.
Which shows that they're using their capital efficiently to generate profit.
So they're profitable, they're efficient. What about their liquidity? I mean, do they have enough cash on hand to kind of meet those short-term obligations?
Yeah, so their current ratio, which is one of the key measures of short-term liquidity, sits at a healthy 2.82, which means they have more than enough current assets to cover their current liabilities.
That's good.
What about debt?
Yeah, are they taking on a lot of debt to fuel all this growth?
Not at all. No, their debt to equity ratio is a tiny 0.03.
Okay.
Indicating that they have very little debt.
Yeah.
And are relying mainly on internal funds to finance their expansion.
That's a good sign. They're not over leveraging.
No, not at all. And finally, their earnings per share, their EPS for the quarter, came in at 24.88. That's a key metric that investors look at,
right? And
it shows that KMS is generating strong earnings for its shareholders.
So all in all, I mean, it sounds like these financial statements and the ratios, they're all painting a pretty positive picture here. They're profitable, they're growing, strong balance sheet, they're generating a lot of cash. But numbers can only tell us so much, right?
That's very true.
I mean, to really understand a company, we have to look beyond the numbers. We have to look at, the people.
The people behind the numbers.
Exactly. The management, the promoters, the stakeholders.
Yeah, the human side of things.
Yeah, so let's get into that. Let's look at the people who are steering this ship. So we've looked at the numbers. We see that KMS is doing pretty well, but who are the people that are actually making it all happen?
Yeah, so KMS, they're fortunate. They've got a really experienced leadership team. Their managing director, Anuj Kumar, he's been with the company since 2016. And, he's got a deep understanding of both technology and operations. He's been a key driver of their digital transformation and their expansion into these new areas that we've been talking about.
So he's been there kind of overseeing it all as they've grown.
Yeah.
What about the rest of the management team, though?
Yeah, so they've got a strong lineup of executives with, diverse backgrounds and expertise. Their CFO, Ram Charan, He, brings a wealth of experience in finance and strategy.
Yeah.
He's worked with some big names in the industry.
Sounds like they've assembled a dream team of financial experts.
Yeah, I think that's a fair way to put it. And then, we got to mention the board of directors too, who
Yeah.
provide that oversight and guidance. Dinesh Kumar Mehrotra, the chairman and independent director, he's got years of experience in the financial world and the regulatory world.
Yeah.
So he brings a lot of credibility and expertise to the table.
So they've got, strong leadership at both the management level and the board level. What about their shareholders? Who are the people that are, backing this company?
Yeah, so CAMS has got a really diverse shareholder base, including some major players in the global investment community. We're talking Fidelity, Goldman Sachs, White Oak Capital. Those are some of their top institutional investors.
Yeah, those are big names.
Those are big names. They clearly have confidence in in CAMS and in its future.
Yeah. It's like a vote of confidence from the smartest people in the room, basically.
Right. And of course, the Life Insurance Corporation of India, LIC, as we have mentioned, they also hold a significant stake in CAMS, which, just reinforces that strategic importance of this company within the Indian financial ecosystem.
So they've got a solid foundation. I mean, they've got the management team, they've got the shareholders that are backing them. And, they've got a proven track record. But, we always got to look at the risks, too, right? I mean, what potential challenges could they be facing going forward?
You're absolutely right. I mean, no business is without risk. One thing to watch is the competition. The mutual fund registrar and transfer agent space. It's getting more crowded. New players are entering the market. Existing players are getting more aggressive. That could put some pressure on CAM's pricing and their margins.
So they got to stay on top of their game. They got to keep innovating.
Absolutely.
What about regulatory changes? The financial services industry is always changing. There's, new regulations popping up all the time. Could that pose a challenge for them?
Yeah, it's something to keep an eye on for sure. The Indian government, they're very focused on improving transparency, investor protection, market efficiency. So we're going to see ongoing regulatory changes in the sector. KMS needs to be, agile and adaptable to kind of to navigate all that.
Yeah. So they need to stay informed, basically, and be ready to pivot when necessary. Speaking of the future, what strategies has KMS outlined to kind of keep this growth story going?
Well, their management team has emphasized their commitment to, growing those non-mutual fund businesses. They're aiming to increase the contribution of those segments to their overall revenue to 20%. So we're going to see continued focus on, areas like alternative investment funds, digital payments, KYC registration, insurance repository services.
So diversification is still the name of the game.
Yeah, they're not content with just riding on the mutual fund wave. They see these huge opportunities in these new areas, and they're putting resources behind it.
Yeah, that makes sense. What about their approach to technology and innovation? It seems like that's been a key driver of their success so far. So are they gonna keep that going?
Absolutely. They're investing in data analytics. They're exploring these new technologies to enhance efficiency, improve customer experience, create new value-added services.
So they're building like this whole ecosystem.
Yeah.
That caters to all these different needs.
Yeah, they are. And they're doing it with a focus on, innovation, compliance, and customer satisfaction.
Well, we've covered a lot of ground here today on CAMS. It's a company that's really at the forefront of India's financial technology revolution. And it's clear that they've got ambitious plans for the future.
They do. It's been fascinating to kind of explore their journey and see how they're blending that traditional financial services expertise with this cutting edge technology to really drive that growth.
Well, we hope this deep dive has given you a better understanding of CAMS, what they do, how they make their money, and where they fit in the Indian financial landscape.
Absolutely. And as always, we encourage you to continue exploring and learning. The world of finance is always changing, and there's always something new to discover.
Until next time, keep diving deep.